Article in the Tampa Bay Times this week, the big investors, the hedge funds, have slowed their $800 million Tampa Bay home buying binge. And, I think it's interesting. I wanted to bring this up because I think it's crucial to understand kind of where our market's coming. The slowdown from an investor looking at the market, or a hedge fund, or whoever it is, they look at the market from a standpoint of getting the best yield, or a yield number that they can get, and having an expectation of appreciation. Well, in the last year, our prices have went up quite a bit. It's become harder and harder for the hedge funds to make the numbers that they want to make, and that was just, it was going to be natural that there would be a slow fall off. What I think people, kind of the silver lining is obviously first-time home buyers and the traditional home buyer have been kind of beat up the last year, fighting against the corporate institutional people.
They couldn't get a word in edgewise with them.
No, they couldn't win. I mean, you're going to go in and make an offer on an FHA loan with 3% down, 3.5% down, and $1,000 escrow, and they're going to come in with a cash offer and $20,000 in escrow and close in 2 weeks. I mean, you just couldn't beat it. So, so for the traditional home buyer out there, it's that's searching for a home right now, it's great. For the home seller, there's some challenges with it. And I think, what it tells me is the artificial ramp up that we've seen in our market is going to slowly start to go away. And I think all the home sellers out there that have gotten kind of arrogant, beating their chest, it's a seller's market, and everyone expecting prices to keep rising, and that we're in the new boom, and that's going to come to an end. I mean, I really don't see how we can sustain the appreciation we've been seeing with the hedge funds starting to taper off.
Yeah, and from the the funds standpoint, it was just clearly a yield. Yield is it's calculated by the rent returns versus the price of the home. So they were just doing what made sense for them from a percentage yield standpoint. Right. Now they're looking at those numbers. We saw Arizona get popped 40% in like a 3-month time frame, and Tampa Bay is up 20-25%
right.
already. So yeah, now they're going to look at it, and from a seller standpoint, it was, do I take this money in the bank cash offer? Made the highest price highest price I can get, I'll take. Or now you've got the traditional first time home buyers coming back in, and their offers may actually look a little bit better, but it's contingent upon financing.
Right. So you're going to have to jump through some hoops. There's some risk. There's some potential fall through. And I think that the one thing I told people is when the hedge funds were buying several 100 homes a month, that was not just you had to look at our market, not just understand how them buying those homes made a difference, but how the transactions they created by freeing up people from the homes that they own. Okay, I just sold a $200,000 house to the hedge fund. Now I'm going to go out and buy a $300,000. It was kind of like this domino effect that really, if you look at the statistics and the math behind it, affected every price range in Tampa. Yeah. Because there's $1 million home buyer out there that wouldn't have got created if the $200,000 house didn't sell to the hedge fund. And that's not to say that some of those homes won't sell, because some of them still will. But I think that the hedge funds going away, you're going to see a little bit of softening in the market. You're going to see some slowdown, and I think that's just natural. We still have really high unemployment. We have a lot of economic challenges, and the hedge funds really helped make our market look a lot better than it really was.
Yeah, and from a seller and a builder standpoint, they should all say thank you.
Right, because they got some equity.
Absolutely.
Yeah, you got some equity gain.
You've got some run up in the pricing a little bit.
Increase in demand.
The values of the home. So, and we saw a ton of people who once thought that they were upside down, now walking away, who they thought they were going to short sell.
And they were able to sell and get out.
Sell naturally.
Because they saw 20-25% equity gain. So that is not, in my opinion, that is definitely not going to continue. I think we're going to see in the fourth quarter of the year kind of some softening of values, more of a stabilizing. If the hedge funds continue to slow down, we're going to get back more to a balanced market. We had a little flurry there, kind of a little upswing, and now we're going to see, I think, in my opinion, kind of a little bit of a downswing. And I just hope that the real estate community takes notice and understands, that history does repeat itself, and so my take on the hedge funds is it was a short-term thing. Do I think that that's going to continue to impact our market? Of course, there's going to be investors. There's going to be more hedge funds trail some of these big ones that came in, but it's not going to be at the same level because you can't make the rent numbers work, and especially with flood insurance. I mean,
yeah.
With some of the numbers we're talking about increasing there. You look in some of the Pinellas County, some of South Hillsborough County, where you're in flood zones, and then the numbers start to really not make sense.
Yeah, once you have to factor that in, and that may come back to circle around to the hedge funds again, because they're buying with cash.
Right. So they may step back in again if prices devalue.
They could.
You know?
Yeah.
So and they don't care about the flood insurance.
No,
they're self-insured.